Hello and welcome to this webinar. The name of this webinar is Momentum Trading Simulation. My name is Stanislav Bernuhov and this webinar is hosted by Exness company. And today I will be a host. I'm a full-time trader with more than 11 years of experience for the present moment, and I will share with you interesting information concerning trading. Before we start, traditionally, let's take a quick look at the disclaimer. Information in this webinar is provided for educational purposes only and by no means can serve as a trading or investment advice. Risk of trading in financial markets can be substantial, and you will have full responsibility for any of your trading decisions. Past performance is not a guarantee of future returns. I want to make this webinar as practical as it can be, and for that purpose I will show you simulated trading process. What is simulated trading? In this webinar we will simulate process of decision making in trading using special software. It is Forex Tester 2, and you will be able to follow trading logics and look over the shoulder of experienced trader, which is me in this case. We accept many questions from traders which are sometimes confused about strategies and they don't know how to apply them in a real market, in a real trading activity. So I will show you how I trade, how I make decisions, how I manage my trades. For demonstration purposes I will use the most popular currency pair, which is Euro versus American dollar, which attracts much interest from traders all over the world. And you might say that it is not a real trading, and I agree with you. Every simulator is not a market. We learn the most when we trade the market in real time with real money. But nevertheless, we can train ourselves, we can develop our skills of pattern recognition and other important skills before we ever risk any money in the market. And before we start working in a simulation mode, let's remember the essence of momentum trading. Momentum trading employs the ability of price action to continue, accelerate and generate trending days. Essence of momentum trading is to buy or to sell the moving market and exit when impulse deteriorates. For example, we have the breakout of some kind of level. It may be rotational center, it may be any other level. And for example, we buy here, we place our stop to a certain point, we wait for the price action to continue, and then we decide to manage our profit. We might want to capture the first target, to close the part of our position on the first target and to hold our position to the second target. That's just the one example. The other example is when we go with the price in a strong trending market condition. The previous example was the range bound. We might trade such kind of situations when markets are located in the trading range. When markets are actively trending, we might buy the market once it breaks some area of consolidation, which is pretty tight, which generates right-handed skewing and pretty small correctional move. I call it right-handed skewing because you can build, I don't know, 90 degrees angle between impulse and the correction and even more. So we go with the price, we go with the action, and because of the fact that we go with the action, we must filter a lot. Momentum trading doesn't mean that you will be very active trader. No, you will not be very active trader. You will be selective trader. And that's why I monitor possibly 6 or 7 markets in real time every day, and I select only the best setups that occur on those markets. Alright, let's talk about setups for entry. What do I use for entry? Of course, it's not that mechanical. It's a very mechanical approach. I don't use simple rules as 1, 2, 3 and 4 and simply follow that rules. Of course, it's not that easy. But nevertheless, I have setups for entry. I need to manage risk. And the first setup that I use is backward swing, or you may call it responsive swing. I call it sometimes responsive swing. When market breaks to a certain level, it breaks out the extreme, and suddenly the big buyer starts buying the market, pushing it back to the trading range, and making it crossing the rotational center, and we have a good trade location for a long trade in this case. Volatility explodes, and we also go with a breakout because we don't want to go against the market in such conditions. And the second entry, or the second setup for entry, I call range extension. It occurs when the volatility dries up. It becomes possibly the lowest for the long period of time. It may be 4 to 5 days or even 7 to 8 days. I measure volatility with average true range indicator with the abbreviation ATR. You can find this indicator in any trading terminal of your choice. So if you see that in the beginning of the day you have the lowest volatility for the long period of time, you can play this setup working with a breakout of a rotational center. I will show you during the simulation how I use those setups and how I manage risk, how I enter, where do I place my stop, and all those nuances. Alright, a few words about position management. When I enter a position, I don't immediately place my stop to a break-even point because this action is not very effective. It's not very productive. Sometimes it's very counterproductive because market usually pulls back to entry point, wipes you out from your position and goes in your direction. It's a very frustrating experience, and that's why I don't do this. I prefer instead to capture small profit. It is usually 1/3 of my trading volume on the first target. I don't move my stop to break even, or at least I do it in very rare cases, in possibly 1/3 of all situations that I trade, all setups that I accept. It is when market breaks out to the new highs, when it goes higher and higher and higher, and I go with a strong trend. Sometimes I can protect my position with a break-even stop. But when I trade inside of the range, I know that the market is going to be rotational. It is going to be choppy. It is going to reverse back to test my entry point, and then it will reach my target. That's why I don't actually do this. I don't place my stop to break even. Alright, what about target setting? I usually use two targets, as I have said. The first is intraday target, and the second is larger target, which is measured by the larger deviations. Well, how do I identify intraday target? Intraday target can be identified with a very simple method. Again, we can rely on ATR or average to range, but in this case we should pay attention to daily chart. We switch to daily chart, we set ATR indicator with parameter of 21, and for example we see that it is equal to 81 pip, and it is going to be average size of a daily bar or daily range. And when we see that market already has completed, for example, 30 pips, sorry about that, 30 pips from the possible low of the day, we know that we have more 50 pips. We have more 50 pips before the action possibly will stop. At the very next day, market can pull back, test your entry point, and then reach your target. So we don't want to get rid of the good position, though we can take some profit and reduce the volatility of our equity curve. And to take some profit, after all, we should manage risk, and we should manage not only losing trades but the profitable trades as well. Alright, and there are, as I have said, there is a way to identify intraday target, and also there is a way to identify larger target. I use measured move for that purpose. The example of a measured move is shown here on this slide. For example, imagine that you have entered a position somewhere here at the day number 3. We have 4 days here, 4 days in this sequence, and if you enter a position in the day number 3, you expect the market to reach the point identified by the measured move, and you get a pullback in the beginning of the day number 4, and as the day completes, As the day evolves, market reaches the lower point or your target and you can exit your position. So I know that if I trade in the range-bound market, such situations are pretty frequent. I'm not very surprised when I see such kind of situations. So I don't place my stop to break even. I protect this position with a stop. I prefer to take some profit at the first target. And I just expect the market to reach my second target. Why do I wait for the second target? Because sometimes the second target can be quite distant. That's the first reason. And the second reason is that I'm a swing trader, so I wait for trades to complete. I wait targets to be achieved. And there is the third reason. If I see unusual strength in the market, or if I see any news release that completely makes volatility explode, so I sometimes can remove my second target. I remove my take profit order and just let the profit run, because day can be very volatile when we have news release, when Fed speakers come with an announcement and they tell something very surprising to the market. And so I want to have distant target. I want to have the ability to make this target more distant and to let the profit run, because I know that letting profit run is a very good trading habit that can make the difference between success and the failure in the long run. Now let's go to the process of simulated trading. We have here Euro versus American dollar. It is 30-minute chart. Yet before I start trading, I first examine larger time frames, and especially daily chart. Daily chart is very important in my trading because it shows me whether this currency pair is traded within a balance or outside a balance. What do I see here? I see first that the market is located inside of a small trading range, yet previously it has broken out the larger trading range, so possibly the market is supported. Recently we had new highs and new lows. Especially we had new highs and a rising action and a rising trend, which can be the directional bias for our trades. We can search for long trades. Well, when market is located inside of the trading range like it is shown here, most of the time I don't pay attention to any direction. I can work in any direction. Alright, let's now switch back to the 30-minute chart and remember our setups. What do we search for? We search for two setups. The one is the least volatility for the period of 3 to 4 days, and the second is backward swing or large breakout followed by a massive responsive action. Well, before we do that, we need to identify the level or the rotational center, the level that helps us identify the stop placement, identify the spot for our stop loss, and that's the first thing that we should do. Alright, what about the rotational center? To identify the rotational center, I need to scroll the chart back and to see whether we had any areas of very low volatility in terms of doji candlesticks or doji bars. And I see such point here. It is possibly 1.3735. It was February 24th. At the day of February 24th, we see two spots of lowest volatility. One occurs in the beginning of the day, and the second occurs as the day closes after the US session, and the second is the least volatile period. So we pay attention to this level. It is 1.3735. Also pay attention that this level is being tested after that. So we see that this level is possibly important for the market. Alright, market has not gone anywhere from this level. It just trades right near this level, and we want to see the least volatility for the period for at least 4 days. and we have this period for now. All right, what do we have here? We have breakout to the upside, and I want you to pay attention to the candlestick or to the bar that I call initiative. The bar or candlestick that closes beyond the level. It is located right here. I call it initiative bar or initiative candlestick. It helps us build the support area. Well, in this case, possibly I have no opportunity to enter a trade because the market has gone too far. All right, yet look what market shows us. It tests this support area, and if we place our stop below the support area, well, we don't need to place it just below the one or two ticks below. We have to apply some kind of filter. It should possibly be 3 or 4 ticks. Our position will be secured. Well, in real trading, I could have skipped this trade because action is going too far. Well, all right. There's nothing wrong with that because it's a market and you can skip trades. You can miss a good trades. Well, in this case, market goes higher and higher, and all right, we are waiting for the next setup. What do we have here? ATR shows us possibly the lower value. The market goes higher, and what do we have here? We have here what I call the level migration. The level migrates to 1.3857. So I will pay attention to this level. All right, I will pay attention to this level and see what happens. Market tests this level. It goes from high to low. It tests this level, so it validates this level. All right, I will pay attention to ATR and see if I have opportunity to open a trade in the beginning of the day. All right, market goes higher, market goes lower, it tests 1.3857. It tests the level. After all, it is called rotational center because market rotates back and forth around this level. And okay, we have this setup. We have a signal. It is ATR breaking its range. It's not a trading range actually, but its range. And we have the pretty small volatility. It is equal to 3 pips here. And we have level 1.3857. How can we execute this trade? Well, let's watch for the initiative. All right, what do we see here? Market breaks this level. And possibly I would like to enter on a pullback. I place my stop just above the initiative candlestick, initiative bar, and I watch for the continuation. All right, my stop is executed. Not every trade is going to be a winner. Yet I'm waiting for the next setup. All right, I have another setup. Market breaks this level to the upside. Well, I don't care if I have the long trade or if I have the short trade. If I see that volatility is low, I know that the breakout can be initiated to whatever direction. So I can play the breakout to the upside. It doesn't matter. In this case, I'm doing the long trade. All right, let's enter the long trade here. Well, let's place a stop just 3 ticks below the low of this candlestick. All right, market rallies higher for a while. It is not going to move possibly. Well, I don't know. Maybe the level will be protected. Oh, my stop is executed. Alright, it's not a big deal here. My stop is executed. Well, let's scroll a few bars more. Alright, what do we have here? We again have the initiative white candlestick, and we can go long here. We can go long. Well, it's pretty distant point, right? It's pretty distant point. Nevertheless, I might go to the long side here because I have previous signal that was not successful. Alright, market breaks out to the upside, and I should decide where should I take my profit. First of all, I extract part of my position, or I close 1/3 of my position here. I don't move my stop, and after all, I have a trend here, and I need to decide where to take my profit on a second position. To calculate the target for my second position, I can measure average deviation or average volatility of the previous deviations that we had so far. For example, we can use the previous rotational center 1.3735 to see larger swings. We have small swings and we have larger swings, and also here we have small swings. Now it is small trading range, and we have larger swings. Now we can use this number as a harmonic number, so we might be aware that market possibly can reach the same points as for the previous trading range. So I will take my profit order to this point. Well, also this point is good because it is located outside the extremes, and when we work with a trend, market is going to renew extremes, right? Alright, in this case, market has reached the point of profit taking, and eventually it is going lower. You see that in momentum trading we have to exit pretty quickly. We don't have to wait for the market to settle. We don't have to wait for the market to pull back. It doesn't make sense. Alright, now what do we have here? We have the level 1.3847. It is a rotational center. It is still in play. So we see that now we have the responsive swing. Volatility is increasing substantially. And we might want to get inside a short trade. Well, before we do that, we should see if our level is correct. Oh, sorry, our level is here. That is our level, 38.57. That is our level. Alright, and market had crossed this level from upside to the downside. We don't want to pick bottoms, right? That's possibly the worst trading behavior, to pick bottoms. And here we have pretty wide area of resistance because market had broken out this area pretty quickly. Well, every time when we have responsive swing or backward swing, we have very elongated bodies of candlesticks, so we cannot pay attention to initiative bars or candlesticks. We pay attention to ATR. For example, I can sell a small pullback with a stop equal to ATR, which is 14 pips, 66. I add 14 pips to 66, and I get 80 as my possible stop loss point here. Well, my stop is executed. Well, it's not a big deal because I should be ready to re-enter this position for the next day. Now, what do we see here? Now the market opens again, and I see that we had increased volatility here. I already had short position. I should not enter a short position at the second time. I should go to the long position now. I should go to the long position, and I have the initiative set of bars, a set of candlesticks here. So I place my market order. I wait for the continuation. I see that market rallies a bit higher. Alright, so what do I have to do now? I have to extract 1/3 of my position here. I'm extracting 1/3 of my position, and I wait for the continuation. What is my target here? My target has to be located near previously achieved extreme, because that's a range-bound market, and for the range-bound market it's very natural to achieve previous extremes, and I wait for the continuation. Well, market pulls back for the very next day, yet it is unable to reach my take profits very quickly. Well, let's wait for a while. Possibly market will reach my take profit order now, yet I'm going to protect my position. I'm going to protect my position, and let's use 15 pips as a protection. Well, no, market is not going to reach my target, at least for the present moment. Alright, nevertheless, I have got some profit. I closed my position on the first target, which is pretty good decision because market had pulled back on the very next day. Well, it's not a big deal, but in some cases market can test my entry point, and I should be in position if I want to be a swing trade, if I want to achieve distant targets. Alright, what do we have? What do we have here? Let's watch the ATR. What do we have here? Alright, you might notice that ATR has shown us new lows for the period of 6 or 7 days. It is equal to 3 pips now. It is equal to 3 pips. And let's watch for rotational centers. Do we have any rotational centers here? In other words, do we have any level that shows us reduced volatility for the period of last 4 to 5 days? Alright, I have this level here. It is 1.3931. I have 2 spots of lowest volatility here. Alright, I have 2 spots of lowest volatility, and also I see that we have small bar crossing this level and closing at the lower side of this level. So what do I have now? Guess what do I have here? I have a resistance area, but I should be prepared to enter the position once market breaks the upper side of this level. So I will place a buy stop order here. I will place a buy stop order here with a stop loss located below, and I can enter a short position because I have pretty small stop here. Also, I can enter a short position for right now. Alright, what do we have here? Notice that area of resistance is working pretty accurately here. It's working pretty accurately here. Alright, market is going down, and of course I would like to capture 1/3 of my position in profits very quickly. Once I see the rally, I capture 1/3 of my position very quickly. Alright, my entry point is pretty good. My trade location is very good. Notice that we had pretty strong trading signal here. Sorry, market is continuing to move. Alright, we had possibly 2 trading signals here, and that's why I have entered a short position here. I could have entered a long position. It doesn't matter. I just want to pick the direction. Alright, in this case I should just exit my position because the swing is pretty large. The swing is pretty large. I'm not sure whether the market will resume this action. Alright. We don't have any signals for the present moment, so we have to wait. Alright, I skipped a couple of days and now I see the ATR heading to its lowest values. Alright, besides I have buy stop order in place. I have to delete this order because it doesn't make sense anymore. And we should pay attention to this section. What do we have here? Do we have any level? Alright, we have 1.3735 level. That was working pretty accurately 2 weeks ago, so we will pay attention to this level again. And if this level confirms, we will use this as a benchmark. Alright, it just breaks, and ATR is not showing us yet any low value. Market just goes back and forth. It just goes back and forth around 1.3735, and now ATR is heading for the lowest value again. Let's watch whether we have here the rotational center or not. I hope that we have this level. We have level migration at the point of 1.3772. And now market has broken out this level to the upside. We have an initiative here. Let me show you it once again, so possibly it can serve as a support. So I will try to enter a long position here. Well, it's a small pullback. It's not a momentum trade, a classical momentum trade, but sometimes I use pullbacks. Alright, market goes slightly higher. Market goes slightly higher, but I'm not sure that it will continue. Alright, I would like possibly to capture 1/3 of my position. Well, stop is pretty distant here. My entry point is not very good. Let me close some more. I will close 1/4 of my position. Oh, sorry, 40% of my position. I will close 0.4 lots. Alright, my stop is executed. My rest of the position is extracted from the market. Yet we have again ATR showing us the lowest values here. Lowest values. And we have the initiative right here. Do I want to enter a short position here? Absolutely not, because my stop loss is going to be very distant here. It is going to be located 30 pips above my possible entry point. It is pretty big value. I don't trade such setups. Well, the market is not going. It breaks out to the downside. Alright, notice how market tests the area of resistance. It is the area of resistance that is built around the level 1.3792. That is a initiative bar, and that is area of resistance. It is tested very beautifully. And if you decide to enter a short position somewhere here, I don't know, so of course your stop placement should take into consideration this area of resistance. Alright, let's resume the action. Nothing significant happens. We have no more signals. One signal was here. Now we have no more signals. Market goes back and forth, and now we again have the lowest value of the ATR. So I'm preparing to play a breakout momentum trade. Do I have the rotational center? Do I have the migration of rotational center? Let's watch. Yes, I have it, because I have the sequence of doji bars or doji candlesticks. distributed along the level 1.3743. What do I want to do here? I want to go with a break because the initiative bar is very small here. It is very small. I need to place my stop 3 ticks below this initiative bar, somewhere here, and to buy the market. Well, the spread is pretty high, right? Well, you don't have to pick the broker with such kind of spread. That's just an example. That's not real trading. All right, I'm stopped out here, stopped out pretty quickly, and you see that again we have the black bar, or the black candlestick closing at the opposite side of the rotational center. I can accept the short trade here, but the market pulls back very quickly, so I understand that the odds of this short position, the odds for success for this short position is pretty slim. As for the long position, it is too late. Well, we are simulating the real trading process, and in a real trading process you might skip some trades because of not enough time to follow the market, because of any distractions outside of the market. Well, in this case you see that we had pretty good setup, pretty good trading signal, but we were unable to execute upon this trading signal. Market beautifully breaks out to the upside, and we had a good trade location, 1.3741. That's what momentum trading looks like. If the market is ready to break, it goes very quickly. It doesn't give you any time to think. It doesn't give you any excuses. And sometimes you got stopped and you are not having any time to enter the trade in the opposite direction. Sometimes it can be frustrating. But on the other hand, you might have very good profit-loss ratios in other cases, like I was showing you so far. It is possibly I don't know, 7 to 1 or 8 to 1, which is pretty good. Well, that's how momentum trading really works. And also in real time, in real trading, I have more time to react. Here I just scroll bars, I just let the market go, but in real time, of course, every bar is the 30-minute bar, so I have more time, I have more room for decision-making process. Alright, what I mostly like about momentum trading is that it helps me to achieve pretty small drawdowns. Well, I have to be very selective, I have to be very picky about trades. I have to select only the best setups, but when I'm disciplined, when I'm focused, I can achieve very small drawdowns, and I have my equity curve going higher with a pretty smooth performance. Well, that's just a sample. That's just a sample of how it works. Now we are coming to the finish of our webinar. I wish you all the best. I wish you good trading. Manage risk. Remember that we are here not for the short-term profit, not for the quick profit. We have to be here for the long-term success. Thank you for your attention. My name is Stanislav Bernuhov, and this webinar was prepared for you by Exness company. You can watch more videos on YouTube Exness channel, and especially I recommend you to watch Trading Breakouts webinar if you are interested in momentum trading strategy. Also, there are plenty of other interesting webinars that I hope can help traders improve their performance and make them better traders, better decision makers. With that, I'm saying goodbye. My name is Stanislav Bernuhov. I wish you all the best. Trade responsibly and see you in the next videos.